The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the September 30th, a terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. We knew that can make that one little 2x4 shift. Well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead. Send me an email. Send it to Steve at TFNN.com. And inside that subject heading, if you'd be kind enough to put radio show question, of course, in our Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday, of course, is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got the Dow down 403 points. The S&P's off 29. NASDAQ is down 1 point. Russell's off 8. Semis are up 12. Trandy's down 137. New York Stock Exchange off 124. Gold's up 36 bucks. Silver's up 52 pennies. Light sweet crude up $1.09. Natural gas up 22 cents. The 30-year Treasury trading out at 159.14. That's up 11 ticks. Lead the charge dollar-wise the upside. Shopify 21. Mercado Libre 18. Up 17. Netflix is up 15. But whatever it is, up 12 bucks. To the downside, lead the charge AutoZone off 44 bucks. Restoration Hardware down 28. Dillard's off 20. Lithium Motors 20. Chipotle is off 16. So where do we begin? I'll tell you where we're going to begin. We're going to begin with the short-term time frame charts. You're going to expect a rally. You're going to anticipate a rally that's going to unfold. We're going to go take a look at where that rally should take us to. Now, as we take a look at the 4 30-minute equity futures contracts, what we can see are TD9 counts in the ES. These are valid TD9 count bottom patterns. In the ES, the Dow, the YM, and the Russell 2000. The only one that's not is the NQ. So right now the NQ is getting its signals from the other three. Now, the rally, if you will call it this, I don't know what you want to call it, rally, counter-trend rally, we'll make a determination of that as price gets up to those oscillator and change lines. So inside the ES mini, we're expecting a rally that takes us up into about the 43.38, 43.39 level. If price is able to close above that oscillator and change line, then that's going to suggest a move up to the 43.7350 level. If price were to close above 43.7350 during the day, that suggests a further rally. Where price should stop and turn back down is that red oscillator and change line, and that'd be 43.39. We didn't take a look at it during this portion of the segment, but we did look at the 1 o'clock update, and we saw that the ES Mini was right down to the level of support, the bottom of its weekly profile. So it does make sense to see a bottoming signal as prices getting a level of support on an intraday or shorter term time frame. So we'll watch 43.39. In the case of the Dow, its target to the upside is 34.072. They won't all necessarily hit these areas at the same time, but if the Dow equity future contract were to close above 34.072. Now, look, that number is going to change by dollars, as price moves up, down, so forth. So use that as a guideline. But the guideline is if price closes above that level, we would expect and anticipate a move up to 34.427. And if price closes above that, you would expect much more rally to ensue. If we take a look at the Russell 2000, right now it's got a TD9 count bottom. Price is dealing with resistance, and that's the bottom of its profile, and that's at 22.16 where we're trading. The level that we're really watching is 22.20. Now, the Russell 2000 is the strong dog out here, and so if the Russell 2000 can take out the 22.20 2220 level. I'll say it again. Room 222, add a 0. 2220. Then that suggests a move up to 2239. And above that, 2246, and above that, it's rally time on. So at a minimum, we should expect and anticipate some type of relief rally. That's what we'll call it here. And if price can overcome those oscillator and change lines, then price is going to go up to the TD9 breakdown level. Now, when price topped here, so if just get a feel for how these markets are dealing with the nines out here, the ES Mini topped at 230 this morning with a TD9 count. So that worked. This TD9 count bottom ought to work. The NQ top with the same time period. Well, let me make sure it was the same time period. I don't want to give you the wrong data. It was 4 o'clock in the morning. See, it was not the same time. So at 4 a.m. is when the NQ generated a TD9 count. Inside the Dow formed its TD9 count right here at 230. And the Russell 2000, it's just got a mind of its own out there. So that's what's going on short term, so that you've got a feel for the short term picture. Let's switch over here. Let me just switch panels and go to another set of screens. These are the daily charts. So the daily charts for the equity future contracts, what do they show? They showed that the price moving, it was moving down and testing its level of support that was created by that Three River Morningstar candle. In order to get back to being bearish out here, the Dow would need to close below 42.9375. If it does that, that could set up a larger A to B equals CD to the downside. But right now, what you need to know is support has held. And when I say support, the ES Mini has a Gartley buy pattern. If we take a look at the Dow down below it, the YM, what has price done? Pulled back and is touching that support area. If it's Three River Morningstar, price needs to close below in order to really suggest lower price, anything of significance. Price has got to close below 33,478. The Russell 2000, this also has a Gartley buy pattern that was also formed by the Three River Morningstar. Now, in the case of the Russell 2000, price had pulled back, tested its breakout level of 2165, rejected that, has spent the last three of 5 trading sessions above that green oscillator and change line, which is bullish. But the other indices are obviously struggling, and so too the Russell 2000. So how do you summarize this? Here's the summary, folks. The ES Mini, the YM, and the Russell 2000 each have valid bottoming patterns that are still in place. Those levels have to be taken out in order to suggest some type of further move lower. If you take a look at the NQ, we don't have any kind of bottoming pattern out here in the daily time frame. 2 days ago, price took out its by the D point or its Gartley buy pattern. And so here, what are we waiting for? Well, there's still an A to B equals CD to the downside. It would be very easy for the NQ to generate a bullish reversal candle today to then say, okay, back to number 2. Gartley buy pattern inside of the NQ. So that's what's going on in the futures contracts. If you take a look at the daily and the 30-minute time frame, we'll take a quick peek here at gold, but we'll probably we won't be able to spend enough time on that before we go to a breakout here. But let's just go take a look at that shiny metal, see what it's doing out here. Let's go take a look at which charts. Well, here's one set of charts. Here is so we can see and take a look at now the daily contract that we're trading is over. It's the December contract. Why don't I have those trend lines on? Well, I just simply don't, but I'll do that. I'll get ready for Goldilocks when we get back from this break, about 3 minutes or so from now. Steve Rhodes with TFNN. Back in a few.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, education educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. You got gold up 34.90. We're looking at the December contract. That's one with the trend lines on it. So you can see that so far the move down. By the way, today we've got a bullish reversal candle, and that's confirming a Gartley buy pattern. So this is the second time we've had one in the past week or so. And what price needs to do is clear that trend line. Doesn't have to do it today, just needs to clear that trend line. Let's come over and take a look at some other charts out here for gold. Here's our 4-panel chart where we take a look at the daily, weekly, monthly, and the quarterly. Now, here you'll see I'm using my synthetic symbol for gold. That way I can stitch together the futures contracts to generate accurate profiles for the longer term time frame, such as the weekly, monthly, and the quarterly time frame. But I also have my advanced detection tool on the daily time frame. Actually, I think I have it on all the time frames just to pick up early profiles that are attempting to form. Now, I won't get a confirmation of this profile. You may have noticed on the previous chart we didn't see that profile. That was because I was taking a look at the December contract out there. But now, what do I want to turn on and off? I'm going to turn off price. Actually, I'm going to turn off the A to B equals CD pattern, so you can see that. You can see the 1 to 1.618 with the bullish reversal candle, at least as of this hour. So we're going to turn that off. I'm going to also turn off price, and this way you're going to be able to see the profile that's forming. So the bottom here, you'll sort of see it. The bottom here, we'll turn off those trend lines too. The bottom here is at 1734. You can see it's a bullish structured profile. The center's at 1748, and the top is at 1768.20. Now we'll put price back on. If we see a close above, I'll put those trend lines on as well. So if we see a close above 1768.20, that's going to be a change in trend signal. That doesn't mean that it's going to be easy peasy from here on out. You can take a look at the weekly chart and see you've got resistance at 1774. But the real resistance, if it's just a counter trend rally, would be that center of its box. And that's at 1790. So if price can close above 1768, the message is we'd likely see 1774. And then we would likely see 1790. Now, if we get it close above 1752 today, the signal is that is the likely outcome, that price will be able to take the trend line, price will be able to take the top of the profile, and then we'll be dealing with the weekly profile levels. Now, you're going to say, well, where the heck, Steve-O, did you come up with 1752? Now, that's a great question, and so I'm going to go answer that for you. Don't you like how I just talked to myself? Somebody's got to talk to me. So let's go over and take a look at this set of charts. This is our our 8-panel multi-time frame charts for gold. And as we take a look, 1752 is the red oscillator and change line, which gold has not been above an oscillator and change line. It was only above it for 1 day. Let me get my cursor out here. It was up above it on September the 14th. 1 day, ever since basically September the 8th out there. So it's a real key level. So if price can close to a 1752, it's an indication that price and gold should be able to take on those levels that we took a look at out here. So I hope that helps out with regard to Goldilocks. Now, I know there's somebody out there. In fact, somebody sent an email. I apologize. I didn't store it on my phone to recall who did it, but the question was, and I've got to change screens for this, is can gold they were questioning whether gold could go up because the dollar is going up. So great question. So let's go answer that question. The easiest way to answer it is for me not to pull anything out of thin air, otherwise known as my, tuchus. Instead, we just simply go take a look, let the charts answer the question for us. So where did I put that? Right here. Okay, that's what I called it, the global flow of capital. So this is the other question that came in. Okay. Okay, give me a second here. Sorry to change this set of charts here. We can come back to this, but right now, let me see if I can turn this stuff off. Turn the gold on. Turn the dollar on. Turn off the S&P. Okay, perfect. So the question was, can gold really move higher with the U.S. dollar moving higher? So I just simply answer it, let the charts answer it for us. Gold bottom. Now, we're using a monthly time frame out here. And on a monthly basis, and because I have a line chart, I'm using closing prices. Just much easier to see, less cluttered for this specific example. So gold bottoms back in March of 2008 when the U.S. dollar was at 72.16. The U.S. dollar right now is at 94.31. Pretty decent move. So we can see that the U.S. dollar index has certainly moved higher. Well, what has gold done? Well, gold was at 916 back on March 1st, 2008 on a monthly basis, on a closing price basis, when the U.S. dollar bottomed, and now we're at 1758. So you tell me, generally speaking, can gold and the U.S. dollar rise at the same time? Obviously, the answer there is yes. I mean, it's very clear that it absolutely can. So, and that it does. And what's really most important is really not that question. The more important question is really understanding how gold is trading in all the major currencies, because what we really want on any kind of a rally out here is we want to see gold rallying on every trader's desk, much like it is today. It's rallying in terms of U.S. dollars. That's on the left-hand side. It's rallying in terms of euros. In terms of euros, it's taken out its descending trend line. In terms of yen, it's got further to go, about 199,000 for an ounce of gold in yen. And you're at about the 13.20 level with regard to gold in pounds. Those are trend lines that we're taking a look at. But gold, when it's moving higher in all major currencies, that's what is the most important thing out here, not regard to whether or not the U.S. dollar is moving higher or lower than gold. You really want to take a look at it as to how all traders are looking at those folks sitting in the UK, sitting in Asia, sitting in the rest of Europe, and obviously the U.S. So that's the charts communicating to you what gold or any instrument, quite frankly, needs to do, any major instrument needs to do to have a sustained rally globally out there. Okay, so that answered that question. There was a question that came inside the Tiger's Den. Let's get to that. That's from Dan in Boston. Well, I think they're one game now, Dan, behind the Yankees. I saw the Yankees game last night. That was a interesting game. I didn't catch the Boston game, but in any event, that's not what Dan was asking. Dan was basically asking a specific question here. You're a Yankee fan. Hey, me too. But you got Boston Dan. I assume BOS is for Boston, but I could be wrong about that. I'm wrong about many things, but yeah, I'm a Yankee fan myself. In any event, let's get to Dan's specific question. Wait, what was your question, Dan? I think it was VUZI. So let me get a question specifically was just looking at the 30-minute chart, VUZI, and Dan was interested in taking a look at the 30-minute time frame. So we're going to open this chart up. The daily is the chart that forms right now, but let's just specifically look at the 30-minute time frame. So Dan, What VUZI did was this formed a Rhodes Momentum Indicator bottom right here at 10 o'clock this morning. And that was a big old key reversal bar. That's one thing it was. It also generated a bull separating line. It also generated 3 river morning stars. So if you were going to ask me, Dano, where's support on it? It's going to be the low of the day. It's going to be at that 1030 level. Now, you've got a valid bottom. Price is back inside its profile. And Dan, you can see that this is on a 30-minute basis. This is a slightly bullish structured. We're going to call it, pretty equal. But 1070 is your next level of resistance on the way up. And if price can clear 1070, then you're off to 1099. So if your question was, does VUZI on a 30-minute basis have a valid bottoming pattern? The answer to that question is absolutely, as does the 10-minute. The daily chart, not so much. Not just yet. Steve Rhodes with TFNN. We'll be right back. Give us a call, 877-927-6648.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's go to our first question, second question, I guess, of the day that has come in. This one from Hector and the Fuel Injectors. Hector says, happy Thirsty Thursday back at you, my friend. The yen did a 2-day break above its consolidation from July in the past. When an instrument breaks above its consolidation range, it's typical to come in and one last time into the consolidation zone, then blast off to finish to the top of its new higher range. Thoughts? Okay, so let's go take a look at the U.S. dollar Japanese yen. And let's go over to my 8-panel chart out here. So this will populate here momentarily. It's the white background charts. And so what Hector's talking about is some consolidation patterns on the daily time frame, I believe. So I'm just going to open up the daily chart out here. And there's really a couple of different consolidations. So Hector, there's one consolidation I've got right here in this little black rectangle. So we have consolidations within the consolidations, what it really looks like to me. And so we'll draw those in. But here's a small consolidation. And we know that when you break out of a consolidation, what that offers us is a measured move that is equal to or greater than the consolidation. So if a consolidation breaks to the downside, it's equal to that. Typically, the measured move is equal to the consolidation. Breakouts to the upside, the exact same thing. So now I'm going to just simply go ahead and take this, come up here, and we can see that the short consolidation pattern has completed. So that's already done. And now we see this is, it generated yesterday, bar number 6. Today looks like maybe bar number 7 of a TD9 count. So that's a small consolidation. Hector, I'm going to go ahead and get rid of that. The larger consolidation that might be setting up, maybe this is the one that you're referring to. So let's go ahead and draw this in. And so here, in essence, that would be our top. And then the bottom of the consolidation, probably about, something like that, give or take. And so typically when you break above a consolidation, so I don't know if that's what you're using, Hector, but this is what Stevie's using out here, which is basically using the top of that bearish engulfing candle from July 2nd out there. So when you do break above a consolidation, yesterday, let's say, would have been day 1, or day 2, even if it was day 2, day 3, depending on what you're using here. Yes, price. What you typically want to see is price come back and test the top of the consolidation. Now, the day is not over for the Japanese yen. But if price closes back below it, I would say yesterday's signal was a false breakout move. Remember, Stevie likes 2 bars, 2 consecutive bars above resistance or below support. And certainly in a consolidation, your resistance and support is set up by the top and the bottom of that consolidation. So your question was, and then blast off. So you got the consolidating pattern. If price can stay above that, and maybe it doesn't do it today and the next day, it doesn't necessarily eliminate the consolidation pattern. I think what you're saying is correct. It's just that right now, I'm kind of looking at this and saying, it only had one day really above the top of that consolidation pattern. And now I would say that the yen is very likely going to target its oscillator and change line. That's at 110.69 right now. Now, that's the daily chart. As long as we have the 8-panel charts out here, Hector, I thought we'd open this up just to give us a bigger view. So we know that there was a TD9 count pattern that created the top on a weekly basis. Now, that was way back in July 2nd. But that's your resistance level out there. That was also Rhodes Momentum Indicator top, and we can see that area has held. So a resistance area that should have held, in fact, is holding. Now tomorrow's a different day. If in fact on tomorrow you get a close above 111.65, the signal from the weekly is price is getting ready to break out to the upside. Then, of course, price would be back above the top of that consolidation on the daily. That would give you your measured move target out here. But I also want you to know the yen is really up at resistance, right? Because you've got the weekly topping patterns that are out there still. You have the monthly TD9 breakdown level at 111.71. So and then you've got, you don't really have a pattern on the daily to identify top. If we go to the 30-minute chart out here, price immediately this morning crushed right through its breakout level, 111.78. That was telling us lower price. Well, you happen to have a TD9 count pattern that is forming right now. So short term, what we should see is this is going to be the bar following bar number 9. So if you're a short-term yen trader, you're going to want to get the low of whatever this candle session is between 130 and 2. If price were to close below that, then you should know that you're not going to get a bounce, and instead price is going to go target the 111.25 level. But for blanks and giggles, we should see the yen over the coming hours go up and test that oscillator and change line of the 111.63 level. If you look at a 60-minute chart, just price pulling back to its breakout area, no bottoming pattern, nothing else really to report other than you've got topping signals all across the board, 61, 20, 240, 300-minute chart out there. So, this is really suggesting price pulls back to about the 110 level. We get some type of short-term bounce up to 111, then that resumes lower into test that daily oscillator and change line. So, Hector, I hope that helps you out with regard to the yen, the consolidation patterns out there, and just simply what is going on the multiple time frames. So thank you very much for writing in, and don't make today very thirsty instead wet that. You know what I mean. Have a drink. Have a drink on Stevie. That's what you ought to do. Okay, so no more questions at this stage here. So what do you want to take a look at with the markets moving lower? What should we go take a look at next out here? Let's go back to the other chart. Because this was with regard to some questions that came up. And I apologize, I don't recall who. It was yesterday, I believe, that when I reviewed this information. And where is it? What did I do? Did I close it? No, I didn't. Okay, it's this chart here. So I probably should have done it during the break. You're just going to have to watch me fumble here just for a moment. So I'm going to turn off the dollar chart. We're going to turn off the gold chart. Well, I can't do it until I turn on the euro. So I'm going to turn on the euro. I'm going to turn on the gold. And really what this set of charts here is what we may be potentially anticipating here. So, that's right. It was a discussion yesterday somewhere about the dot-com bubble. And a lot of people call it the dot-com bubble, and I don't have a problem with it. You call it anything you want. But people think it was just simply that the drive up into 2000 was just simply because of what was going on here in the U.S. In the internet and all, in the pets.com or whatever it might be, stuff like that. I say that's smokescreen. Nothing could be further than the truth. Why? Because what we take a look at is capital flows. So if you take a look at the top chart here, the top chart is the euro. And the euro topped out in 1995, moved lower all the way down into October of 2000. October 2000. Isn't that when the Dow topped and the U.S. markets topped? Something to think about. So what we saw here was we saw the euro go from a level of, what was the euro going for back there in 1995? It was going about 140, all the way down to 82 cents. Yeah, 84.8484 was so that's quite a move. And so what we saw, if you take a look at the bottom panel of the chart, that's the S&P 500. Yeah, I've got the S&P out here, and that move higher. Let's take a look at what's going on now. And that set up just a huge move, that last move inside the Dow, inside the NASDAQ, inside the S&P 500. Well, what do we have that's going on now inside the euro? Well, we can see that the euro's top actually came back in June of 2008. Again, I'm using a monthly time frame. I'm just using closing prices here. And we can see that the euro has been heading lower. So the low, we know that the Dow, we know that the markets typically form some type of a bottom in October. At some point in time, we're going to see a blast off inside the U.S. markets, and we're not going to be able to look back. And that's the thing that takes the Dow up to 40, 45, and 60,000. And the formula, everything is set for that to unfold out here, folks. The global flow of capital, it's been fleeing Europe, and it'll continue to flee Europe. Steve.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got a request to take a look at ticker symbol SLGG. I didn't look it up to see what it is. It doesn't really matter when it comes to what you and I do here during this hour. We're agnostic to the symbol. So if you learn these techniques out here, they're being applied to everything, anything, and every time frame. So SLGG. The question is, do we see any kind of a bottom here inside of SLGG? So what do we know? Again, just stepping back and looking at the longer term time frames. We know that this thing bottomed way back here on a monthly basis on March of 2020. TD9 count bottom, that's in place. Price runs all the way up to its breakdown resistance level of 875 and gives it up. On a weekly basis, as price was making that high, it was bar number 8 of a TD9 count. Price is now pulling back very close to its breakout level of $2.90. If we take a look at the daily time frame, you've got a TD9 count bottom. The bar following bar number 9 is the low of that pattern. That low is $3 even Steven. As long as price does not close below that, then what we have out here is a TD9 count bottom. You also now today, it appears that you're getting the bullish reversal candle to confirm a Rhodes momentum indicator signal. So you've got two bottoms. Does two bottoms make it stronger than one bottom? That I don't know. It just makes it two bottoms. What I do know is regardless whether it's 1, 2, 3, or 10 bottoms out here, what price must do to prove itself that it's going to get some traction to the upside is clear resistance. Well, the first level of resistance is what it's testing as we speak, so to speak, and that's at $3.19. That is the oscillator and change line. It is red. So it's very important for price to close above this. This could be just a deflection point and just a counter trend move. How do we know? We don't know. That's the thing. We have to go ahead and assess the charts. That's why we look at these multi-time frames, because we have a little bit more confidence in the bottom when we see the intraday time periods. Notice for Stevie, the intraday time periods are 195 because there's 295-minute bars in the cash indice each day, 330-minute bars. How many ever 65-minute bars, and then you've got the 30-minute and the 15-minute charts. We can see in each of those, you see the Rhodes momentum indicator signals that are present there. So we do know that this is truly attempting to form a bottom. Now, typically what you would see, and I'll just go to the shortest time frame here, is you want to see resistance levels fails. What kind of resistance levels? Well, you've got task market profiles. Those have failed out here, so that's good. But the next level that really needs to, that you're really looking, not just from a 50-minute chart, is 330, a TD9 breakdown resistance level. Price can close above that, not today, but if price can close above that, that's giving you a really strong signal of a move higher, a change in trend. It's 345 on the 30-minute time frame chart. On the daily back here, if price can clear that oscillator and change line, that gets us, it looks like it gets us back inside the daily profile. So, well, I'm sorry, take that back. 325 is where price gets back inside that profile. So that's really what you'd love to see. Get back inside the profile, then you're looking for a run maybe to 363 to 378, 376. Those would be the levels out here. But the question was, does it appear if SLGG is forming a bottom? It absolutely does. It absolutely does. So best of luck on that trade. Michael writes in, and Michael wants to take a look at the TLT. So as long as we're on this chart out here, we'll go ahead, or the set of charts, we'll go ahead and let those we'll go ahead and let those populate, and I'll actually read his question. Well, that's going to take about 0 seconds. Michael's question is: TLT goes down, market goes down? Question mark. Well, so he really didn't want the TLT from that standpoint, so Stevie kind of jumped the gun there. So instead, I need to create another chart. So here, I'll do that. I'll give me a moment here. We'll stop sharing that, and we're going to go let the chart answer Michael's question. Now, let's turn this from this bar chart here into a line chart. So again, I've got the monthly time frame up. So let's edit this chart. Let's change that from a bar chart, candle chart, I should say, to a line. That's going to make it easy. And then you wanted to look at the 30-year, you wanted to look at TLT, but instead I'm going to put up the 30-year Treasury. Nah, it's the Dow. I'll put up the TLT. It's a cash indice. So let's insert symbol. I don't know how long the TLT's been traded. We're going to find out in a moment here. So let's put in TLT. Let's make this its monthly time frame. Let's make this a line chart as well. Let's insert this little puppy, see how far back we go. Yeah, because this just started trading in 2002. So I'm going to go ahead and get rid of that. That's why I suspected. And let's go ahead and insert the 30-year Treasury. So ZB1 Stevie special symbol. Oh, hold on a minute here. Shoot. Let me just do this. Do that again. ZB1 apostrophe, or not apostrophe, exclamation point. Okay, so now we're going to let this populate. Well, it only took us back to 1998. All right, let me do this. Let's get this screen here a little bit more centered. And, I don't know really that we've got enough data here to suggest that. Yeah, Michael, I'll tell you what I'm going to do. I'm going to do a little bit more work for you. I'm just take a look at this on a monthly basis right here at this data point. July 16th, we see the 30-year Treasury move lower. What was going on inside the Dow? The Dow continued to move higher out here. We can say that we've seen here, Michael, we'll just do it right now. July of 2020 is the high inside of the 30-year Treasury. What has the Dow been doing since then? It's been moving higher. So, no, I think that really what you want to do is thanks, Tom. What you really want to do is, I'd say, if trade each one independently out here. So yeah, I mean, we can. That's how I would look at it, Michael. So I hope that helps you out. The purpose of the other two charts that I was showing, gold and the U.S. dollar, was to really get rid of the fallacy that we can't have gold moving higher with the U.S. dollar moving higher. It's just completely false. We looked at the charts, right? So it's not like it's Stevie facts. It's just simply true facts out there. So. And then when we took a look at the euro and the Dow or the S&P, whichever chart it was that I had up on the screen, that was to help you understand maybe the bigger picture that could be out here inside the U.S. market. When capital is fleeing somewhere, it's got to go someplace else. So, Michael, I hope that helps you out, and thanks for writing in, and thanks for the question. So no other questions. We've got about a minute to go. Let's go take a look at just the general markets, get a feel for what's changed, if anything, since we last looked at them. Here, so where are we? You got the Dow is trading off 437, the S&P down 3. From a weekly standpoint, the week's not at an end here, but you can see in the weekly chart, the ES mini just trading back towards the bottom of its daily profile. The NQ below the bottom of its weekly profile. The Dow is well below the bottom of its weekly profile as well. Look, those are really important. So tomorrow's show, I'm going to be recording between 8 and 9. They'll be replayed between 1 and 2. I'll make it as pertinent as I possibly can. But just write this down on a pad of paper. You get it close below 14,802 in the NQ and 34,276 inside the Dow. You've got change in trend signals. Now remember, inside the Dow, it also has that Gartley buy point. By the D point and Gartley buy pattern. And so really what the Dow has to do is close below 33,478 to truly give us some kind of a change in trend signal. So we're going to go to our last break, I believe it is. Yeah, our last break. We'll have 2 minutes when we come back. I think there's a question in the den, which I will try to get to. and we'll be back shortly, about 3 minutes.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So the last question that is coming in, the question is, why am I not yelling from the rafters to sell, sell, sell out here? And so the answer to that question really stems from taking a look at this set of charts here. We really touched on that during that very last segment. So here are the 4 equity future contracts. And so what we know is tomorrow's close is going to be very important. And that is that in order for me to really get bearish out here, what I need to see is closes below the bottom of these weekly profiles. Now, not by just a point or two, but really a close below the bottom of these weekly profiles. And so far, they've held. You got the NQ in the upper left. That is the week indice that you're discussing. You've got the S&P. We can see how that has held. The Dow has held its level. And look at the Russell 2000. Just been in a sideways consolidation. So I believe these markets are more in a consolidation than they are in something that's getting ready to just simply totally tank to the downside. But I'm going to let price prove itself and tell me what it's going to do. But so far, these levels have held. So that was number one. Number two reason, and not really in this order or anything, if I take a look at the global flow of capital and try to assess what's going on across across the globe, and that is a very important thing to do here, the U.S. is really starting to separate from everybody else. I mean, the U.S., if you take a look at the S&P, you've got a rate of change of about 15%. You're minus 11% in the Hang Seng. Australia's down to 8%. The emerging markets are down below, they're negative. They're at negative 8% for the year. The Shanghai is basically flat in terms of dollars. The FTSE about 3%. So capital is, if we're going to take a look at this set of tables out here and ask where is capital flowing to, it really goes back to that other chart that we took a look at. And then finally, on the daily time frame for the ES Mini, for the Dow, and for the Russell 2000, they all have confirmed Gartley buy patterns as we approach the favorable seasonal cycle, which in essence basically kicks in and begins today. Even though I know my chart shows about the middle of October, it's never usually right on that day when it is. It doesn't give you extra points or anything. It just says we're now about to enter the favorable seasonal cycle. So those are the reasons why. Folks, stay tuned. You've got 2 more great hours left. You've got David White up next with the Power Trading Hour. Tom O'Brien, he'll take us on home. And remember, tomorrow I'll be with you at 8 a.m. sharp. We'll see you in the morning. Take care, folks.